Well, earlier we heard from Canopy Growth CEO about the measures that company has implemented to try and turn around the cannabis producer. And we also had earnings out today from Aurora Cannabis, which swung to a profit of just over $250,000, which isn't much, perhaps, but it is a lot better than the $45 million loss it saw a year ago. For more on what drove Aurora's results, we are joined by Bloomberg's Stephanie Hughes. So, Stephanie, can you tell us more about Aurora's latest quarter?
Of course. So to bring viewers up to speed, the results were in line with analysts' expectations, and this was because of the revenue growth to $63.4 million, as it was really supported by these strong double-digit gains in the medical cannabis segment. However, the consumer cannabis segment actually fell, but the company said that was due in part to its exit from the U.S. CBD market. Also, CEO Miguel Martin said that this was the company's strongest fiscal year-to-date performance, as it was really diversifying into other markets like Europe and Australia. Also reacting positively to some of the numbers we got out of the company today were analysts who said that they were encouraged by the $3.4 million in adjusted EBITDA this quarter, and they were really also encouraged by the expense reduction.
So with these two companies, were there common themes that emerged when you were going through the results?
Yep. So I think the biggest highlight this quarter was cost reduction, narrowing losses, making sure that the company was really prioritizing reducing debt and getting its balance sheet in order. And I would say that this is also just a common theme across companies outside of the cannabis space. We see these darkening economic outlooks. So I think cost reduction and making sure that companies are in a good financial standing in the face of uncertainty is a huge point for a lot of companies this quarter.
Okay, Stephanie, appreciate the latest on both of these. Thanks so much. That was Bloomberg's Stephanie Hughes.